Hello, everybody. This is Harry Boxer, the Technical Trader, techtrader.com, and it's my pleasure to be here and answer any questions you have about stocks, indices, or anything from a technical viewpoint. I'm a pure technical analyst. Here's a picture of my website, techtrader.com. If you start a free trial, come in for 2 weeks for free. Just sign up, no credit card, and join the club, and I think you'll have a lot of fun and make a lot of money. That's my little spiel, but I really want to get to looking at charts today. So feel free to ask any questions. Looks like someone here has a question on APRN. Is that correct? Well, that's got a problem. Let me show you why. First of all, APRN was a swing trade for us when it broke out and pulled back. I told my people it was an excellent buy near support under 5. Within a couple of days, it popped to 693, pulled back again, and it was another trade. I got everybody out near 8. That was my target, and you can see the stock collapsed. At this point, put a fork in it. I mean, look, the stock's oversold at key support, and it might get a bounce, but I never catch a falling knife. It is dangerous. Stocks that come down like this can bounce briefly, shortly, and then get hammered even lower. Something's really wrong here, obviously. And to move from 8.25 to 272 inside of 3 weeks is a total disaster. If you buy it here, it's pure speculation, and you risk the stock going down to $2 or less. Something's really wrong there. We have questions on NU and a couple others. Let's take a look. NU, well, it was looking good for a while. I want to point out that this stock here, when it broke out and then pulled back and broke out again, was right at a key resistance level. So the 590 area, 588.90 is a triple top. What is not good is that it broke a trend line. And then it came down to a support level and tried to bounce. But this is called a kissback. Anybody that knows anything about technical analysis will let you know that when a stock breaks a trend line, even if it bounces off support, if it doesn't get back above that line quickly and rolls over, it's over. In other words, the stock may have to come down to 3.75 or even 3.25 and test these lows or maybe broaden the base pattern. For now, what I would look for is a close-up view as to whether or not across that line it can make a move. And if it does make a move, watch for resistance at 545, 560, and the double top at 580. Once you get to 580, you're on your way to a much bigger move. And then you can take this and make that the trend line. That is possible that on a longer term basis, you're looking at a trend line, something like that, or a trend channel. But it's not my cup of tea. I like it overall, but it's not, for me, there's many better trading vehicles out there. ISCC. Now I know this company very well. ISSC, sorry. I know it very well. I got some of my institutional clients were on this stock. They told me all about it when it was trading at 6, 7. I like the technicals on it. And this is what we call an ascending bull wedge. And it's ascending because the bottoms are ascending. Even the tops are slightly ascending. It might even be called a bull flag. It doesn't really matter, but it's a continuation pattern. However, any move that goes from 577 vertically to 915 in 6 days is going to take some time to digest, and that's what's going on. What I do like about this consolidation is that the underlying technicals are green. The on-balance volume is actually increasing during this pattern. It's being accumulated. Your next target on a breakout, and first thing you want to see is above 925. Then your targets are 10 and probably 11. But the measure moves even more than that. Let me show you something. In technical analysis, moves tend to happen in increments, meaning the same increment. This move from 577 to 915 is about 340. If you take the pullback low and add 340 to it, around 8, you're talking 1140. So what I would do is put a line at about 1140. And my projections, should it break out with volume, meaning if I see heavy volume and I need heavy volume, but if it gets above, say, 9.25, 930, the first thing to do is test the resistance from the May high at 990. Once it gets past that, you're looking at 1140. That's the measure move that equates that move and adds that onto there and brings it up to there. So that's what we call a measure move in technical analysis. And also, more importantly, on a long-term basis, going back 9 years, That's also about 9.25. So a breakthrough 9.25 could be powerful and complete a 14-year base pattern, which really can enable a much bigger move on it. And I'm hearing a much bigger move may be coming. So this is a very bullish chart, one that I like a lot, but I'm waiting to see if it pops out of there. It looks great. Another question is on SOFI. Now, SOFI looked great here, and I'll show you what it did. It was down in about a 9-month or 8-month declining channel. It formed a double bottom base. It broke out there on a major breakaway gap and formed a little flag. I actually put a swing on it with a stop under there, and it was stopped out very quickly. And look where it did after it stopped at 785. It went down to 4 and change. This is why you cannot trade without stop losses, folks. You just can't. You do that, you're asking for a problem, big one, because all it takes is one big loss to wipe out your portfolio and your buying power. Now, if it's going to turn around, the first thing I want to see is a breakout. The first thing you want to do is take out a prior low high area, meaning right now resistance is at this low that was broken, because support becomes resistance when it's broken. Here's where it broke support. That low was 557. This recent high today, 557. How about that? So if it gets to 557, your targets are a test of 590, 6.25, and then 660. Those are my targets on it. But again, there's so many bullish looking charts. I would much rather be in something else. You're welcome. I got a question on Google. If you look at a daily chart on Google, number one, it's a perfect Elliott wave, 1, 2, 3, 4, 5 wave decline. So I look for 5 waves down because once a stock has 5 waves, it tends to base or reverse. There's a big gap in here. The stock testing it. If Google breaks down underneath 96, my target is 86 to 87. What I need to see is after 5 waves, a thrust that comes up through 106, 6.25 area. And then it's going to have to take the 50-day out at 110 and the declining tops line at 115. So 106, 110, and 115 are not only your resistance levels, but your targets for Google. You're welcome. Any other questions, folks, on any stock? Any index, anything? Well, there were some questions earlier, it looks like. And that was for the prior candidate, for the prior person. Okay, we got a question here on Snap. Obviously, a pretty ugly chart. What the positives are is that this is what I would call an exhaustion gap. Made a lower low, bounced to resistance. Why is that resistance? We'll take a look at the line I drew. It comes across that low and this low in here. Tagged it, came down. Tagged it again, came down. So what do you need to have on this stock? I'm not going to be bullish on Snap till it gets over 1280, 1290. Sorry, make it 13. Once you see 13, your targets are 15 and 16.75. For now, the positives are it broke its declining channel. And it did it with a breakaway gap 2 days ago, but the volume wasn't big for me. The underlying technicals are flat. Do I like this? Meh, not really. Like I said, so many better looking charts. It will be better, much better over 1285.90. So not excited about it. Well, I like Finger, but we traded it today. But I want to be really careful with you guys on this. Okay? If you look at Finger on a day trade today, this is one of my day trades. I have a day trade site called thetechtrader.com where we mostly day trade. We do some swing trading. Now this morning, I want to point something out. Pre-market, that was yesterday late. After hours, it came down. Okay, but then it turned around. This morning, the market opened and it dropped down. It spiked up, and when it got to this level right here, I want to point this out to you. One way to show you this best is to go back in time. This is what it looked like. It looked pretty ugly, didn't it? It then popped out above the moving averages. Notice they're crossing over. My first rule is when you see moving averages cross over, look for the first pullback. We had a 2-minute pullback and it popped. And we had like a 5-minute consolidation wedge and then it popped. This is a tough one to read this today because it kept going without much pullback. Here's where we got interested. I saw a run that went from 5.25 to 8.33. Let's call it 3 points. When it pulled back and held and held and held, I said, watch this pattern for a breakout. It broke down instead. But there's where it broke out. So I said, I'm looking for 3 points off the low. Now, I don't know if it goes there, but the measured move is 9.5, 940. It reached 8.49. A nice move, but it reversed. And I also told everybody, keep long unless this line breaks. That's support. It actually formed a bull wedge here. See it? Or a bull coil. It tagged 879. Didn't quite get to my 940, but when this volume came on the downside, I told everybody to be careful and set your stops under 8. It got down under 8. Oh, I'm sorry, it wasn't under 8. It was under this line. 765 is my stop. Eventually, take a look. My target was 9, right, folks? 936 was tagged. That's where most of us got out, 9 or better. So that's the day trade. Now, and I'm assuming you want to know what's going on a daily chart. I got to tell you, folks, do not chase a stock that's been up 8 days in a row. This is up 9 days in a row, everyone. 9 days in a row. Now, what you could do, one of two things. The number one question I get, folks, is how do I stay in a trade? Especially with a stock like this. How do I stay in a stock? I mean, say you bought it at $1, or $2, or $3, or even $4 or $5, and it's trading at 8.87. You're nervous. What do you do? Well, first of all, look at a 15-minute chart and get an idea where support might be. Even a 5-minute chart. You draw your line across support levels. And here's what I do. The first thing I do is when this is taken out, 775 is my support. And look where the VWAP is, 764. That's my support zone. That's where my stop is. If it comes down to that level and keeps going, fine. But I always tell people, you don't have to sell stuff at all at one time. Everyone has a thing in their mind when they decide to sell something, they sell it all. Okay, it's not necessary. You buy in tranches, you sell in tranches, meaning sell some, sell some, sell some. Okay, short, raise your stop under there, raise your stop under there, and keep raising your stop. Like for example, right there, if that's what you want to do. The point being, you don't know where the top is, and you don't know where the bottom is going to be, or where the takeout would be, or where the reversal comes. So the way to do that is to sell when you see a spike. Most of my people sold some of this on this pop-up because it was near the old high, around 7.5. And it ran up to 8.5, and we took some more off the table. And it traded up to 9.25. And I told them people, it's at the end of the day or near the end of the day, you can sell some or all of it. But raise your stops, tighten your stops there and there. Stops are important, trade with stops. Do I like the overall chart? How could you not like it? But at the same time, it's extremely overbought. Anytime a stock goes from 62 cents to 936, 15-fold in a week and a half, you better be careful about getting hammered, because this will, when it comes down, be a $3 stock again. Take my word for it. So that's my take. Question on Win. This is a good chart. Why is it a good chart? Well, first of all, I like the group. I want to point some things out to you. I always draw lines at prior highs to get an idea where resistance might be. I also want to take a look at a chart. See, let's take a look at these lows. And if lows connect with highs at the same point, that's resistance. In the case of Win, we've had a 1, 2, 3, 4, 5 wave decline. Notice the third wave had 5 waves. 1, 2, 3, 4, 5 waves. It's called a fifth of a third. And then it came down, bounced off the 5th wave, retested it. Here's your breakout. Here's your retest of that line. It's called a kiss back. And then today, very important day technically, because it broke out of a base pattern. And I believe my targets are 79, 84, and 95. 79, 84, 95. I like it a lot. Question on the SPY, what to do with it? Well, the first thing you got to do with SPY is look at the S&P. So you look at the SPX. And by the way, I have a weekly webinar in my site where every Saturday I publish a 45-minute to an hour-long complete review of all the indices, the ETFs, 80 to 100 stocks long and about 30 or 40 short. And I do that for my people every weekend. Please come join me and you'll see the value of that alone is priceless. It's institutional quality. So what I showed my people is that we were oversold. We were at near support, slightly below it. I expected a snapback to at least test 3,900. If it got really jiggy with it, 4,000 where the 50-day moving average is. There's a declining top line though, that may be a problem between 39 and 39.30 up there. If we get through it, we can rock all the way to 4,100. Do I think this is an important low? A major low? I don't know, but it's an important low in my opinion. But we'll see how far it lasts. This is a 3-day rally, and as we speak, the market flies to and is positive by 12. Check out the S&P 500 this morning, 37.22. Now we're almost about 80, 82, 85 points off the low. And looking at the NASDAQ 100, these are the only 2 indices I follow. I gave everyone a buy alert this morning on the pullback down to 11.3. It's now 11.640, 340 points off the low, and doing it in a very orderly rising channel for the NASDAQ 100. Let's go back to the S&Ps and answer your question on the SPY. When you have a pattern like this, it looks something like that. My target's 38, 20, 25 by the end of the day. We shall see. Market looks outstanding. We just came through key resistance right there, and we're on our way. What I follow is this chart. It shows me the 5-minute charts there and the hourly chart there. So let me show you what my take. We've had a nasty decline that saw the NASDAQ 100 go from 13.7 to under 11. We're talking 2,800 points nearly. It exploded, got to resistance, backed off, and filled a gap, held the 50-period moving average on a 5-minute chart. That's the red line. And now we've broken out. The key is going to be, and this is the big one, can we take out the channel top right there? That comes in around 11.8. We're at 11.640 right now. Now to the S&P, to answer your question. I know this is a long answer, but I wanted to make my point. The S&P 500 came full circle from 48.18, I'm sorry, 43.22 to 35.75. I had a target of 35.85. Bounce, pull back, test the gap, didn't even fill it, and now we've broken out. The key is going to be, in my opinion, whether we can get up through 3,900. That's going to be key. There's lateral price resistance, declining tops line right in that area. But one of the keys on the hourly chart for me is when I see the moving averages cross over, the stock market or the index pulls back, tests, and goes again. Outstanding day for the market. Outstanding day. Now, your question about the SPY. Sorry I took so long on it. I wanted to give it some background. The chart on the SPY looks like this. Oh, boy, I just got blown out of my chart system. Hang on, everybody. Only takes a few seconds to bring it back up again. There it comes. My bad. Okay, so here's the SPY. Essentially a double bottom, a little bit lower low. We fill this gap. This is key for me. Take a look at that line I'm drawing right now. There's a couple of highs in there. There's a gap there. There's a pullback low there, and there's a snapback high there. 389.5, give or take a half a point, is key resistance. In addition, your declining tops line or channel top coming into juxtaposition right there. My target, I would say 389, give or take 50 cents. But 389 to 390 is a good number to look for on a follow through. Okay. I hope that answers your question. I love the look of it. Lots of other questions. Let's get to them. GLD, that's gold. Well, you know what? I've been so bearish on gold for so long, but I can't say I'm bearish now, not based on this. But I will show you this. 1, 2, 3, 4, 5, 6, 7 waves, very unusually long. This is an island reversal negative top. But take a look at where we're at right now. Pretty much right on it or slightly above it. I think the key on GLD is going to be here. Again, I draw my lines where I see resistance and support and gaps and things like that. So that is resistance. We get above 161.2. We got a good shot at 167.8, then up to 174. So if gold is reversing, you can see where resistance might be. It's a no-brainer, technically, to say 167.8 and 174.5 are your targets. But notice it pulled back from that line. And at the 50-day moving average, which I follow, forget about 200-day moving averages, folks. Forget it. If you're a short-term trader, even an intermediate trader, you need to know where the 50 is. Now, the cross of the 50 and the 200 is another thing, the golden cross. But for now, let's just say that over 161.5 on GLD, I'm bullish to 168 and 175-ish. AbbVie, love that company. Do I like the chart? We'll take a look. I love biotechs, period. I was long AbbVie here. Let me show you something. When AbbVie broke across there, after coming out of this consolidation platform, there's your breakaway gap, moving averages cross over, the stock flags and runs. 1, 2, 3, 4, and a big fifth wave up, spike up to a long-term channel top. I told everybody, sell AbbVie, it's too far, too fast. Anyway, 173 down to here. Company's got great drugs, don't they? Here's what I'm looking at. If AbbVie pops 145.5, if you're long, great, just stick with it. But if it pops that level and you want to go long, my target is 153, 156 zone. Those will be targets for me, 153, 156. Once it gets above 156, it's Katie bar the door. This target probably be 162 and 175 again. Apple Snapple. Apple did a one. It's like a 1, 2, 3, 4, 5. Perfectly drawn down channel right there. A perfect snapback to the double bottom underway. A nice, this is called an engulfing reversal. I love it. I don't like the volume or the technicals. So Apple's got to prove something to me. Number one, take out 151 and then 154.5. Those are my near-term targets. Once you see that, you're probably looking at 158.9. That's a big number. That's price and moving average resistance up there. That's going to be a tough cookie to crack. It's also about a 50% fib retracement of the entire move down. So if you're in it and you're looking for a place to trade out, look for 158.9. Question on XLE. Nice recovery. You can see two things. A gap, which was retested but unable to get through. That's your zone of resistance, but there's also resistance there. So what I'm looking for is if you're in this and you're looking for an extension, the first thing you want to look for is 83. The second thing, 86.7 zone. Those are your targets. But I'll also point out anything that's gone from 68 to 81.5, 15 points that quickly with no pullback is subject to a pullback retest. I would say support is 77, No questions asked. Swing for TQQQ. Same thing here, like most stocks and indices or ETFs, which this is. They were in beautiful, orderly down channels. Then this one accelerated, and it did it with this angle. And I'll tell you why I'm drawing it off there instead of there. I always draw off gaps. But even if you did that, you have a what we call a falling wedge. Notice and this is very bullish. Notice the gap pop. And engulfing reversal bar, also very bullish. So you want to know what to do with TQQ or where the target would be? 26, then 29.5 or 29.25. Wait. Okay. 20. Here's my targets. 25.90, 26, 28.25. That's for TQQQ. Pat wants to know about TBT. Day trade? Well, I don't mean, you mean for today? Well, let's look at a day trade and see what's going on there. Well, we got a nice snapback, right? There's resistance right here, price and moving average resistance. To get through that, the VWAP would be your target around 31.75, followed by 31.8023. I mean, there's resistance across here. That's going to be tough. Isn't this bond a treasury? Yeah. Oh, I don't know. I don't know about that, but those are my targets. If it gets to 31.6970, it's 31.77 and 83. I assume you're scalping that one. Hold on. I don't look at. I'm not going to look at futures at this point. Okay. I don't do futures anyway. The address on my site is thetechtrader.com, as David just posted. I already did the SPX. RTY, IWM. Okay. Here's my take on what's going on with RTY. RYT, sorry. No, RTY. Well, RTY is a tough. Anytime you get this sparse spaces, if you want a small cap, then do IWM. Yeah, I don't know why you even look at RTY. Let's look at that better. It's a better way to gauge it. Same thing here, declining channel. This is more the line here. This is going to be tough going. The market is not going to be led by small caps. So small caps are going to be tougher. I would say, though, resistance is yesterday's high. If it gets to 176, I'm looking at 180.75 and 189.575 as potential targets. Maybe 185. Okay. 180, 1.75 and 185 for starters. XBI. Well, I trade the LABU because it's triple. I think biotechs are going to lead the way. Look at the recovery in the biotechs. The May, June lows were horrendous. Are you aware of the fact? Check this out. The XBI in November was 174. And by May, it was 62. If you think that's bad, look at LABU. How about 185 to 4? There's a lot of room to run for these. But specifically for XBI, I needed above yesterday's high to really get it going. So watch for that. Resistance right now is 83 and the moving average at 85. Once you get above that, then I'm looking for a move to test 89. That's my near-term target, XBI. Be careful, though, about one thing. There's always a possibility if the market dies or fades here, that is one big bear flag. And it might be because if you look at the angle of the descent and the declining top line, let me show it to you. It's right there. So if this is a 1, 2, 3, 4, and there's another wave coming, this could get killed. I would stop under today's low, under 80, out. Under 80, out. How do you set up your universe? Oh, I'm gonna have to get back to you on that. It's too long a question. LCID. You can come into my site for free and ask me. I'd be glad to just sign up at detectrader.com. So, question on Lucid. I like Rivian better. Let's take a look. Rivian has a nicer base, has held support better. Is it doing well today? No, but Lucid, I can't do anything with the stock. Is it a base? Possibly. It bottomed in May, it went up. It actually looked good to me there. It was breaking out of the Nimbus head and shoulders or right hand extended V, but then it fell apart. And it tried to bounce and reverse off the moving average. At the very least, you can't be in Lucid until it takes out 1770. That's where I would start. Not now, not here. Don't anticipate. It could about, who knows where that goes. I don't like it. Uranium stocks, I like them, and I like CCJ. Why? It's the biggest one in the industry. Look at that long-term chart. What I would do is set a stop right there under 24.5. But I'm going to want to see the stock do better than this. Why? Because this rally has come on low volume. I'm not happy with it. If the market fades or this fades, it's pretty dangerous in here. And here's why. This could be a rising bear wedge or flag. If it fails right there, and if it doesn't get through this level, it's going to roll over and get crushed. I really need it above 29 to say it's back in vogue with volume. 29 gets me 31.5, maybe 32.75. Once you get above that, you're in business for way, way higher. This is the long-term chart, of course, but I would say on a long-term basis, this might be in the mid 40s. LAC, I like lithium stocks. I'm not crazy about this one until I see a change of pattern. Overall, it's a beautiful chart. Overall, of late, it came down a triple bottom and rallied to resistance. To really get bullish, it's got to get above 33. I want to see this falling wedge taken out for starters with a move over 29.90, then above 33, and then you're on your way to 40 and 45, 48. It looks pretty good. My settings for my VWAP, that's a good question. I only use what Telechart gives me. I haven't changed the setting. They work for me though. By the way, I think TC2000 is the best charting software ever made. Question on AMD. From Gil, I believe. AMD. Well, look, here's another thing. AMD was one of my biggest winners ever in history. When it broke out here at 15, I was all over it. It went up to 180 some odd, I think, 175, 164. Okay. It's had multiple waves down. 1, 2, 3, 4, 5, 6. I don't know. Bottom line is multiple waves down. Is it cheap down here? Well, look, when I see 1, 2, 3, 4, 5 lows taken out, I hesitate. I don't buy stocks when they're making lower lows, when they're breaking long-term channels. Now, the technicals aren't good. It looks like it may have bottomed. If you want to trade it, your resistance is 71.5. 74.25. 79. Am I crazy about it? Absolutely not. Again, many better charts than this. And LABU, if you're in my site, you know that every day I trade this stock. I've never seen a stock that dips every morning and rips every afternoon. It's amazing. But in the overall scope of things, It's a 1, 2, 3, 4, 5-wave decline. It got near a support level after coming off the low and pulling back where it held. But that could also be a bear wedge. Now the volume's good, so I anticipate them to break out to the upside. Above 8, I'm looking at 9.5, 3/4, and then I'm looking at 13 again. On a long-term basis, 17 and 24, something like that. I'm thinking this stock can triple in the next few months if we get any kind of bull phase. SOXL. Well, you can trade that long. I like the I like this one. I also trade it in my room. It looks to me like well, first of all, the short-term pattern here, if you look at a 15-minute chart, you'll see it broke a falling wedge. It broke the resistance and it retested today. That is very bullish. This is why I'm bullish on the market. A lot of the market and stocks act like they want to go higher. Where's your target? Right now, I'd have to say 12 3/4, 13 is my target, 12.90, around 12.90. We get past that, we're looking at 14.5 and 16.5. APA and DVN. Well, APA is one of my biggest winners as well. When the market bottomed at 6 3/4, I put out a swing on this down there. It came off the low, and you can see what it did. 50, 195. Now, the long-term chart on APA shows a massive rising channel. It just bounced off the bottom of it. The daily chart shows a big recovery. I don't trust oil. I think it's being manipulated by OPEC. So whatever. The bottom line is, technically, it's still in a downtrend, but about to break out. Notice, connect where we are, double resistance here. We get through this double top. Your targets are 42.5, 45, and 47 3/4. That's your really next target. If you get to 42.5, look for 5 more points. Now DVN, same kind of pattern, a little different, maybe a little bit more bullish. Pay attention to this resistance at 73 1/4, 75 1/4. There's a gap there. Once it punches through that, you're in business. For a longer term move, that could take this to over $100. Do I like it? Generally, yes. I like APA and Oxy better. Doesn't mean it isn't a good chart. CYBR. Obviously one of the top security software companies. Another example of a major declining tops line in vogue since last November. But conversely, a rising bottoms line and a new rising channel in place. Based on this pattern right where it is here, I'd have to say we get to this triple top. You're going to go test the double top at 179.80. That's your next target. I'm looking for 20 points on it if it pops here. Got it? Question on CWAN, Clearwater Analytics. Don't know this company, never heard of them. I will tell you this, my quick take is, it's a declining mode. Longer term, intermediate term, it broke a mini inverse head and shoulder type pattern. There's your breakout. There's a moving averages crossing over, very bullish. It formed the bull flag. That was bullish. It did it above the moving averages. It then moved up again. At this point, my target is 19, 20 3/4, 22.5, something like that. Looks pretty good. I like it. Do I trade with options? I don't, but people in my room do. So come into my room and check out the trades because there's lots of optionable type stocks. DGII, fabulous chart. I mean, really nice. A triple top base pattern breakout, a consolidation for several months, a pop out, pullback, and reversal bar with volume. This looks great. I'd have to say that my projections are mid-channel target at 41, upper channel target at 49.50. I like it. Do you make any money trading? Of course. Why would I trade if I didn't make money? FAZ. Well, it's an ETF and it's a bear. If you want to trade bear financial, your resistance is right up in this 32 zone, but you can see it pulled down hard with the market rally. And I would have to stop it under the moving average, say 23.5 gets me out. And actually, I wouldn't be in a stock. Not yet. Not yet. ALB and PBR, let's take a look. Well, ALB's got a nice long-term chart, indeed. Rising channel, support and stop under 247. Resistance and target 304 and 335. Those are my targets. Measured move is even bigger. Check this out. Really? 118.19 points from this pullback low. That means 306.70 up there is my target. Petrobras, the South American oil company, it's too choppy and sloppy for me. There's better oil companies. If you want to trade it, fine. Your resistance is right there. If you get it to 14.25, I would say I would target 15.75, 16. Once you get to 16.5, you're good to go for much higher levels. And here's my projection. 18.5, 3/4. FREY is the tech trader swing. Has been for a while, but I told everybody be careful up here. Now, today's action is not bad. It's an inside day. What you need to do is get to 16.5. My target's 18, 18.5. I like it a lot. DGII, you're looking for downside projections? I wouldn't if I were you. But at least a retest of 31.75, 33.75 and 31.75, followed by 30.75. If that breaks, you got a big downside to 27.5 and 25.75. Uber is also a tech trader swing right now. But I think it was stopped right there. Yeah, it was, because it went into the gap. So I like it still, and I might reinstitute it. My institutional guys love the long-term story on Uber. They think it's the $300 stock. That's what they told me. I am not kidding. Right now, you got to get the resistance there. 30, 30.25, and then 32.5. Once you get to the 34.25 target, target's 37. Question on BKE. Nice chart. Buckle, retailer. Again, a nice base pattern, long-term downtrend. Watch for a pop over 35, 35.15. Then your swing is going to be 38.75, 39. And a test of this level, and that's a big one at 43.5. CMI, Cummins. Sam, this is the O-line company. I just can't get excited about it. But your target is 234.5. Beyond that, if that's what you're looking for, a test of that high at 247. AEHR. Love this chart. This was a tech trader swing, one of my best of the year. You see this explosive move back in July, August of last year, and then the wedge. That's the day I put the swing on at $6. And within 90 days, it was 27. Most of my people got out in the mid-20s where my target was. And you can see the falling wedge, the breakout. And then guess what? You see this wedge? When it broke out of this wedge, yours truly, at 11.75 at 12, I put another swing on it. It met all my targets and went up to 18.75, eventually reaching 1943. That's where we exited. It came down. It's got a widening channel. I'm not sure about this one. I liked it overall, though. I just would say, look, you cannot let this one go below 13. That's your stop. Not doing well today. That's a bit surprising. Your targets are 17.5, 19.25, and then 24 if it goes. Roku. That's a pretty bad looking chart. Not sure why you'd be interested in that. What percent of account was on AEHR? You talking about in my swing trades? I don't look at percentages. I just put them out as a swing trade for my people. I don't have a model portfolio, if that's what you mean. Too much work. Okay. Well, Roku is ugly as all sin, and I wouldn't touch it with a 10-foot pole. For starters, it needs 64. But for real starters, for me to say this is going much higher, let's take out 74.5. Until then, I'm not that interested in this stock. There are so many better looking charts. I already went over Google, KP, if you want. I can do it again. Like I said, Google in a downtrend at resistance. I wouldn't be interested in Google until it takes out 106, but your targets are 106, 6.5, 110, and 115. Question on SQ. Again, another tech stock got blasted. You see the declining tops line. There's so many better charts out there, and this is not even taking out resistance yet. For starters, it's got to take out 63 and then 72. And once it gets above 72.3, maybe you can see 77, 85. And this is the big intermediate target, 93. So yeah, I think it can go up 50% at some point, but it's got to break the declining tops line first. This is in a downtrend. I'm not sure why anybody's interested in a stock in a downtrend. XLC. Well, same thing here. Today, ugly. I mean, if you're going short, that's one thing. But to ask me a question about XLC, brutal. Brutal. Massive downtrend. No bottom in sight. That's not a bottom. It might be, but there's no reason to be buyer there. PayPal. That's better. PayPal had a long decline, dropped from 300 to 68. Platform, but broke down. I didn't like that at all, technically, but a lot of stocks did. It's trying to recover. You can see, though, it's got a long road to hoe. The key numbers on this one right now are 98, 99, and 103.4. Once you get above that, you got a new trend on their way with a target at 122.23. ARR. Well, again, my take is always go to an hourly chart and then see the real pattern. Maybe if it gets over 545 with energy, but right now, all I'm seeing is this in the base. Does it look okay? Sure. Do I like it over 550 better? Definitely. The VIX, what to do with the VIX? Well, first of all, hang on a sec. I mean, you can't chart the VIX other than it's an overbought, oversold oscillator type reading. This was a no-brainer. When we got into the mid-30s, like we did in the last 7, 8, 10 months, the market rallied every time. When we got down there, the market topped every time in that zone. What about now? It's neutral. MNTK. Breakdown from a head and shoulders pattern. I don't like this at all. No reason to buy this stock, not with that kind of reversal bar and then a follow through downside bar. Now it bounces back, of course. There's support right there. Again, trying to pick a bottom, you're going to cut your fingers. FXF. Frank, you okay. I guess some people love trading currencies. It's got a big base pattern. It's ugly. Above 91.60. The high for the last week and a half. Maybe I'm interested, but I don't like to look at this chart at all. Other than it might be a basing pattern. Do I have a view on the market in general, or are you more of a technical chart reader? Both. My view of the markets are like I said earlier, the S&P 500 in recovery mode. But is this just a 1, 2, 3, and this is wave 4? We got a 5th wave down. I'm still waiting for the other shoe to drop. I don't know yet. We're getting a late rollover in the market at the close. Not a good sign. But let's just see where it closes. Which stock is your top pick for the next month? I got a little company here that I think is monster. It's called Seed. Check this out. This is a company, Origin Agritech, which manufactures genetically modified seeds for corn and soybean and stuff like that. And they're negotiating with the government of China for massive monster contracts. If they get them, I think the stock rocks. You can see it went from 3 to 28 here. I think we're going to duplicate that and then some. I'm looking for 40, 50, 60 in the next year. It's only 9.5 right now. Seriously. Could be a monster. I have a personal position in it. It's not my only one, but it's one that I'm very high on currently. I'm not sure if JN, if you want me to look at open, OPEN, open door, is that because you wrote open in small letters? Please, folks, use caps for symbols because I can't tell whether it's something. This is a horrendous chart. No reason to own it at all, other than it's oversold. Just an idea. SMLR. Better. This was on my short list. You see when it came down from the wedge and broke down, that's where I put it out as a short. At 109, I think it was. It formed a bear flag, a bear wedge, another one, and finally plunged down into the 20s before reversing. I still don't like this pattern, although it is more bullish now than it ever has been, or at least in the last 6, 8 months. Some pretty big resistance. in the 44.5, 46 zone, right there. And I would stop this one under 36 for sure. ENVX, nice pattern, W bottom, breakaway gap, pull back, almost fill the gap, form a wedge. It looks fine. I think the target would be huge. Resistance is 25.5 to 26 in that area. That's your initial target, followed by a measured move to 31. STSA. Oh boy, does that look bad. Yeah, it's a 1, 2, 3, 4, 5 way. I don't like this chart. Underlying technicals are just okay. I will say it's pullback on a Fibonacci retracement about 0.375 fib to a point where if it gets any lower, it's done. Put a stop under 5 and go for it. Your targets 6 and 665 on snapback. All righty. I'll take some more questions. Actually, there's quite a few here, so let me just answer that. FCX, I thought that was answered by the prior person, but I'll do it again. This is a 1, 2, 3, 4. Maybe it's a truncated fifth wave. Maybe it's a base pattern. But on something like this, particularly commodity oriented, you'd have to chart the price of copper. Above 33.75, I'd go long with a target of 39 and 42.3. VWO. Vanguard Emerging Markets. Well, it's the same as IWM, right? Pretty much. Again, key resistance and target would be 39.575. Once you get through that, 42.25. I love reverse splits. Reverse splits make a stock thinner and more, I guess the word's manipulable. But the bottom line is, if you get a thin stock with big news, it can go ballistic. We've seen it a million times. Big day for bingo. We're in the front row, but I'm not excited about this stock at all. Perhaps if it gets above 2, I would say 57 with volume, then I'm interested. Then the targets are 287 and maybe 3.25. I don't trust this stock. I never have. How does BOP assist me in decisions? It just confirms the trend, balance of power. Question on STEM. You can see that STEM broke down, snap back to the moving average. I would say until STEM gets over 1450, I'd be careful because once you break down underneath the moving average, if you don't get back above them, and then you form some sort of bear wedge like this could collapse. Be very careful. I don't chart the price of crude oil per se, but I will tell you that if you just look at the USO and you ask yourself, is that a head and shoulder top? It could be 1, 2, 3, 4, 5 waves down. It appears this could be 1, 2, and 3, and wave 4 underway. I agree with that. It's possible. Your next target 58, down from 72. That's a big drop in the USO. That means crude oil comes down in the 60s. EWW. Well, 1, 2, 3, 4, 5. This could be a base pattern. There's resistance at 48 3/4 and 47 3/4. This is important. That declining top line needs to be taken out first. So your target's 47 3/4, 48 3/4 for starters, but it's resistance right there at 46 for starters. That's why I don't like that. American Express, AXP, same thing here. These are stocks that doubled. I mean, they have double bottom, triple bottoms, and they're bouncing. But it's got to take out resistance. Right now, you got to have a problem, 147 and then 153. ASTE, Aztec, again, ugly charts with lousy technicals, they don't do it for me. Above 36 3/4, you might see 39 3/4, 40, and then the declining top line at 43. But again, so many stocks look better than this one in particular. I'd rather not be in it. I gave PBR out already. SLB, I have a problem with gold and silver. There's no follow through until SLB takes out 1955. Then I could target 20 3/4, 21 3/4. But for now, this pullback has me very concerned. Now it's rallied back up again. Just be careful. American Airlines, again, I like trading the airlines when they go, but this has got so much crap in the chart that I don't even know why you'd want to even consider trading it until it takes out 15.5 with energy. GPS. Possible double bottom, base pattern forming. Got some pretty big resistance right there. It's a key double top. I would say over 1190 with energy. Then I'd look for 13.5 and 15.5. Not a bad pattern, but there's no guarantee that this trend is still not in a downtrend. Hasn't broken out. GCBC. Bank. Well, on this one, long-term target is 72, 2.5. It broke out of a wedge here. It moved up nicely. It's flagging. I would say we don't want it below this level now. Well, I would stop under the moving average, which is 53 3/4. Target, again, 72. Yeah, I saw what happened with First Solar yesterday, but is there a question? This is a tech trader swing when it broke out from the flag and pop right there. I'm not sure why Solar's had a tough time of it, but this really hasn't broken yet. At First Solar is a stop under 127. Michael, thank you very much for the compliment. CLW, take a look at the daily chart. Well, Clearwater paper, I love the fact that it broke out, ran up and filled the gap. I like that. Now the pop. Easy stop right there on the 36.25. What I want to see now is that taken out. And once he gets above 41.5, your target's at 43.5 and 46. I don't think it's a weird stock at all. Is there anybody else? We're past our time. It looks like I've answered all the questions there, David. And I had fun doing it.